7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Wesley Financial Group is not a law firm.
Are you a victim of the timeshare trap and think there's no way out? I'm Chuck McDowell, founder of Wesley Financial Group, the original timeshare cancellation expert. And I'm here to tell you that there is a way out. All you need to do is give my office a call. I will send you a timeshare exit information kit absolutely free, explaining how the timeshare industry works and your options for cancellation.
Call Wesley now for your free info kit. 800-969-7766. That's 800-969-7766.
Paid for by Wesley Financial Group.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, James. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. amount. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Friday here on the Financial Exchange, and what has been just, quite honestly, it's one of those weeks that I am going to remember for my entire life. Just because you get very few that are actually, that have such momentous happenings and things going on. And so this is one you can put it back there with, the week of March 12th back in 2020. You can put it back there with October 10th, 2008. There's a handful where it's like, I remember that. This is going to be one of them. And where we stand right now on the tariff side of things, the only thing that matters, by the way, at this point from a tariff perspective in terms of, kind of where things can be adjusted, I think, is what's going on with the U.S. and China, where China overnight announced that they were raising their rate of tariffs on imported U.S. goods to 125% and added a note. This will be our last escalation because, quite honestly, at this point, it doesn't matter anymore.
Which is what we said yesterday, so been spot on there.
They literally were just like, I wish I had the actual quote here, but it quite literally, I'm paraphrasing, was, we will not be raising tariffs any further as we do not believe this will have any impact on the matter going forward.
This is from the ministry. Even if the U.S. continues to impose higher tariffs, it will no longer make economic sense. It will become a joke in the history of world economy. End quote.
So that's what they said.
From the Chinese. Okay.
So there's that.
They're also right.
So, okay, this is where we are right now. And in terms of what we're actually seeing, just to tell you how other companies are starting to respond to this, Five Below. By the way, I had no idea what this company was the first time I saw it. I thought it was a jacket company. It turned out to be a discounter.
Yeah, I thought it was like a snow company, like
I
a
did
snow
too.
jacket company.
But we're talking like 10 years ago when they first came out, right? You're not talking about like this week you realize that Five Below is a dollar store?
I'll say maybe like 3 years ago. Okay. Still wasn't quite sure what they were.
Just making sure. They've been around for a while.
I think it was the logo threw me off.
Basically what you have here, Five Below has now asked their vendors to send products back to China rather than bringing them into the U.S. and paying tariffs.
Where are they?
On boats.
No.
The products are
Turn around.
Like, don't want it, send it back
Yeah.
is pretty much the message. And I'll quote here from Bloomberg. Shipping giant A.P. Moller-Maersk, so Maersk as they're more commonly known, sent a letter to suppliers on behalf of the discount retail chain saying that the company has elected to suspend its cargo shipments following the U.S. and China tariff impact. It was unclear if the memo went out to all Five Below vendors or a subset, but the letter says that no containers are to be delivered to the yard starting April 10th, and all containers that are loaded must be unpacked and returned to the carrier.
So what's Five Below planning on selling precisely?
So it's not just Five Below that is in this situation. If you look at like the retailers that have really high exposure to China, interestingly, Walmart's not one of them. Walmart came out very strongly after they reiterated their guidance a couple days ago. They said, look, 2/3 of our products are U.S. based. And of the remaining ones, China is not the most important component.
That's fascinating. Do you think that's mainly because of grocery?
Yes, it is. It's because
and are they talking about dollars or are they talking about?
Don't know.
Yeah.
I didn't get a specification there, but Walmart literally said we expect to see an uptick in our market share and performance as a result of this. So Walmart thinks this is good for them because they don't have as much stuff that they import from Amazon on a relative basis as a proportion of their from China. Yes, as a proportion of their business. Companies that you got to look out for. Anything dollar store related.
Yeah.
Dollar Tree, Dollar General, they got issues. Target is a big importer from China. Wayfair, local company, huge importer from China. So you Best Buy, big China importer. Like think of all the electronics that aren't like critical important. Like not like you're not talking about the stuff that is ultra high tech, but hey, routers and network switches and remote controls and all that stuff.
Lenovo's a Chinese company, right? My ThinkPad here is probably made in China.
Probably.
Yeah.
Don't know offhand.
Yeah.
But in any case, like these are the things that you have to look for. And remember, if you're a big company, you can start to figure out other things. If you're a small company, not publicly traded, you're 5, 10, 25 employees and you sell a bunch of stuff that might be made in China, I don't really know what options you have right now. Like, it has to be one of the scariest times for those kinds of businesses trying to figure out what to do. So, ultimately, where this matters is it's going to be twofold. Number one, the potential market impact, and two, all those small businesses that do employ an awful lot of people, how do they figure out how to navigate the longer this goes on? Because it's one thing to say, okay, I'm going to pause my shipments for a week or two. Maybe I was able to order some extra inventory and I can, deal with things that way. I was able to, front load some inventory the last month or two. But you start going out a couple more weeks, and if this is still where we are, you go, how do those small businesses make it that are in the business of selling stuff that they've been buying from China?
I will start by saying, absolutely correct, and I do wonder what some of those stores...
Like I have two buddies who have quite literally, they've basically said they've called it quits.
Yeah.
One of them, I've talked about these guys before.
Game board. Yep.
One of them's a sole proprietor. He sells little like toy figurines. He's like, I have no business until this is resolved.
Yep.
The other one, the board game maker, is like, yep, I'm holding shipments in China. I can do that for a little bit, but ultimately, I got like a 30 to 60 day clock before I need to, figure out if I can keep my staff.
And breaking across the Bloomberg screen right now is that a Chinese airline is delaying Boeing jet delivery as tariff escalates. So Boeing can't sell their jets to China. Fortunately, there's a long wait list for other companies that want to buy those.
They'll be able to deliver them somewhere, I'm sure.
But yeah, that's the type of thing we are talking about here. I will state for a moment that even though this is chaotic and crazy, we are in a slightly better place than we were on Wednesday morning when this was going into place.
Much better.
Much better than fighting this on 60 different fronts. We are in a better place here. But there's a lot of trade that happens between the United States and China, and at these rates of tariff, it is not that the prices go up. As Chuck said, it is that the trade itself does not occur when you have 145% tariffs on Chinese-made products coming into the U.S.
Yeah, the importer just won't bring them in because they know they can't pass that off enough of it to be able to be profitable. So that is, kind of what you're seeing on that front. Let's take a quick break here. When we come back, a couple things I want to go through. First, we did get University of Michigan consumer sentiment data a little while ago, so I want to walk through what we're starting to see from that as people are breaking that down. And then we get this piece from the Wall Street Journal. It's titled, Market Rout Shatters Long-Held Beliefs on Investing. Let's discuss
That's pretty important
when we return.
Market volatility is at its highest point since the pandemic. Keep it here for the most comprehensive coverage of the global trade war. This is the Financial Exchange Radio Network.
The breadth of the stock market sell-off in recent days hasn't been seen since the early days of the pandemic. And while it's easy to say don't panic, if you're concerned about your portfolio, given the impact of these tariffs, now's the time to have that conversation. Hi, this is Mike Armstrong from the Armstrong Advisory Group. If the market correction has you anxious, or worse, rattled, give us a call at 800-393-4001. Let's get together and talk through your financial strategy, evaluate its strengths and weaknesses, and make decisions for the future that are in your best interest. These are challenging times, but we've dealt with them before and are prepared to deal with them again. Our goal is to help you protect the assets that you've worked so hard to attain. You can give us a call at 800-393-4001 and request a no-obligation consultation. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan, the experts in elder law, has written a new guide that may help ensure that your assets are protected for years to come, while helping you avoid unnecessary mistakes during your planning. As an example, the new federal estate tax exemption is nearly $14 million. That could lead to a larger inheritance for your family members, but still raises concerns. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place to take your next vacation. Enjoy spectacular beaches, world-class cuisine, and a wide variety of water sports. Don't miss your chance to visit America's Caribbean paradise, the United States Virgin Islands. Go to visit usvi.com for more information and to book your trip today. That's visit usvi.com.
10 a.m. this morning, we got University of Michigan's Consumer Sentiment Survey. And what it showed, the previous reading came in at 57. I don't really know what numbers mean in this. It's just lower ones are bad and higher ones are good.
Yeah, and I think it ties out to sentiment back in no, that's the other confidence survey.
I don't. All you need to know is higher numbers are better, lower numbers are bad.
Yeah.
At least for the sentiment piece.
Yeah.
So sentiment declined from a reading of 57 to 50.8. Consumer expectations, meaning, hey, not how do you feel about the economy now, but how do you feel about the future, declined from 52.6 to 47.2. And the big piece that I think everyone really wanted to see here is, look, what's happening to inflation expectations. And this is where we saw something really interesting. Because inflation expectations went from a 5% over the next 12 months to 6.7%. And what's interesting about this is normally inflation expectations tend to track one thing: gas prices. When gas prices go up, people think inflation is going to be worse. Mike, according to
gas prices just plummeted.
According to the CPI, which again I know is not the be-all, end-all, but gas prices over the last month went down 6.3%. According to the AAA national average, they went down about 6% as well. So somewhere in that ballpark. So ultimately you have this thing that's happening where gas prices are down, yet inflation expectations are up, meaning, look, there's one proximate cause there, and it's consumers are nervous about the impact of tariffs on prices. I'm going to pull in a few other stories that we're going to cover at different points. JPMorgan reported earnings this morning. And what they have indicated is that they are seeing an uptick in credit card activity in the short term. Likely, they say, because consumers are starting to stockpile things, which in turn, by the way, can drive more inflation as supply and demand get a little bit out of whack in the short term. Mm-hmm. So you've got kind of all this dovetailing here, all of it kind of coming together. And the other interesting thing about this survey is we've talked about the divergences that we see in the responses across the political spectrum to the University of Michigan survey. Basically, hey, if you're guys in the White House, you feel good about everything.
Yep.
The piece that's interesting on this is that even Republicans are now starting to see an uptick in their inflation expectations, which goes against what we have seen for the prior several months. So you're starting to see it broaden out in terms of where the inflation expectations are. There still is obviously a divergence in terms of, the breakdown by party affiliation, but everyone is now thinking inflation is going to be higher than they thought it was going to be a month ago. So
with
that's
Democrats
kind of
assuming way worse, independents right in the middle, and Republicans the least of all. But all of them moving in the same direction, which is the interesting and compelling piece here.
Correct. So let's get to this piece here from the Wall Street Journal. Market rout shatters long-held beliefs on investing. Which long-held beliefs are being shattered, Michael?
The long-held belief is when there's panic, people buy bonds, specifically U.S. government bonds.
Totally
that is the
different this
long-held
time.
belief.
So what we've seen now this week is nothing short of kind of shocking. Let me not mince words. It's nothing short of shocking what we've seen in the bond market here, because the moves that you are seeing are simply not the ones that you typically see during a period of downward market volatility in stocks. It's usually, okay, stocks are getting sold, bonds end up getting bid. And instead what we've seen now, the 10-year Treasury as of right now, up another 18 basis points to 4.577%. The 10-year last Friday at one point was at 3.8 and change. You're now up almost 0.75% in the last week. It is a violent, rapid move up in yields. And here's where this is going to impact the average person. You're trying to buy a home right now. If you were trying to buy last week, mortgage rates were 6.6-ish, somewhere in that range.
Now they're 7.
If this one actually prints, if we print like the 10-year closing in the 4 or 5, like almost 4.6 range, you're going to have rates back above 7% nationally.
Yep. Yeah, 7.25 wouldn't be shocking on that.
No,
the
the spring housing season just got cooked if this stays in place for any extended period of time.
So if you're listening out there, you might be thinking, Chuck, well, we had this in 2022. Why is it so unique, right? We did have a 25% stock market sell-off in 2022 combined with a 15% bond market sell-off, if I'm not mistaken. Is that generally accurate? September of 2022 we got there?
We did.
What's different about this one? I mean, everything's a little bit different about this one. So the stock market rally in 2022.
The single biggest thing that is different here is that even with rates moving up, and think about this from the perspective of if you're listening to our show, let's say that you're poking around for savings accounts. Which bank attracts you? It's usually the one with the highest account, like with the highest savings rate.
Sure.
Provided that it's not like Steve's Awesome Bank, like as long as it's a reputable institution. You generally track the highest rates. Like there's plenty of you listening who say, yeah, I shop around and try to find the highest CD and I move my money where that is.
Yep.
Totally understand it. Likewise, there are large institutional investors all around the world that do the same thing, not with CDs, but basically like the large institutional equivalent of a CD, which is government bonds.
Mm-hmm.
Hey, U.S. Treasuries, the rates went down. Okay, I'm going to move some money from there over to Japanese government bonds for a little bit. Oh, now the U.S. Treasury rates are back up. I'm going to move back there. But the point is typically
Argentina in this example would be Steve's Awesome Bank, right?
Yes, Argentina is Steve's Awesome Bank.
Yeah, just continuing the analogy here.
Yes, they have been in receivership multiple times, and you just don't want to rely on them. So what you normally see is when U.S. yields go up, investors flock to those treasuries, and so the move that you typically see is yields up, dollar stronger. Because in order to buy treasuries, you need dollars. You can't buy treasuries with yen, yuan, euros, whatever you want to, any other currency. So the interesting thing of what is happening here today, not just today, but this week, you got stocks down, rates up, and dollar down. The dollar's being sold. Dollar sold off about, let's see. Right now, this morning, we're down about another 1% or so, which, again, these are big swings on the dollar index. A normal daily swing on the dollar index is less than 0.25%. That's what you normally see. The dollar since, let me just get the date right, just because I want to make sure I nail this. The dollar since March 27th, about a week before the tariffs went into effect, is off 5% now. It's a huge currency move in a week. Now, the Trump administration, I am on record. You can listen to our shows from back in the fall. I do think they want a weaker dollar.
Sure.
There's an orderly way to get there, and there's a disorderly way to get there. We're kind of seeing the disorderly one this week. This is not if you look at the Trump first term, actually, this is a great example. If you want to go back and look at what an orderly move down in the dollar looks like, it's 2017, where the U.S. dollar started 2017. The dollar index, I'm just going to quote it, it was trading at about 103. By the end of the year, it was at 93. So it was a 10% slide in the dollar relative to other currencies by the end of the year. Did anyone say boo about it then? Did stocks say boo about it?
No.
Did yields bark in any way, shape, or form? No. It was something where There was a very orderly move that happened over a span of 12 months, because that's how long a year is, and of 10%. So you were moving, call it 0.8% a month on average. This is 5% in 2 weeks. And like that scale of move, the problem is it disrupts other financial markets and it spooks international investors, because here's what you get from international investors. Okay, I wanted to invest in U.S. companies, but now if there's the potential that the dollar could be off 5% in a week, man, like I got to rethink that if I'm an international investor, because I'm responsible to investors in my home country. I'm taking on a ton of currency risk now.
We don't have time to continue this right now, but we need to come back to this conversation because this is the one that matters way more than the stock market conversation right now. We're going to have Wall Street Watch next, but then return to bonds and currency right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bench you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan, the experts in elder law, has written a new guide that may help ensure that your assets are protected for years to come, while helping you avoid unnecessary mistakes during your planning. As an example, the new federal estate tax exemption is nearly $14 million. That could lead to a larger inheritance for your family members, but still raises concerns. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Build a Retirement Budget. Mike, one of the rules of thumb that gets tossed around is, hey, just withdraw 4% of your portfolio each year and you'll be fine. Is that true still?
It can be, but it also leads to some confusing conversations because that 4% rule, one, is dependent on a very specific asset allocation that was recommended by the person that created it. And two, a lot of those things have changed over time and doesn't really account for the fluctuations that every retiree sees, right? You might retire and not start Social Security right away, in which case your withdrawals could be higher for a period of time.
What about on the other side of the ledger when you look at expenses? A lot of people say, well, I expect my expenses to go down. Maybe I only need 70 to 80% of my pre-retirement income.
Yeah, I mean, this one makes sense, right? Like, you're right now making money. You might be putting money into your 401k, paying FICA taxes that you won't in retirement. But this one especially, I have to say, varies a lot from person to person. That's 70 to 80% of pre-retirement income. And think about it this way, right? Do I still have a mortgage? Might that mortgage get paid off at some point in my retirement? What sort of debts do I have? Am I going to downsize to one car? Are we going to need both? What sort of travel am I planning on? And so that 70 to 80% rule can be a good starting point, but really you need to start with the budget.
Our guide is titled How to Build a Retirement Budget, and the way to request it is by calling 800-393-4001. That number again is 800-393-4001 to request our latest guide, How to Build a Retirement Budget.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets remain volatile to wrap up a memorable week as investors continue to digest the tit-for-tat tariffs between the U.S. and China. We also saw the producer price index this morning, where wholesale prices unexpectedly fell in March by 0.4% versus expectations of a 0.2% increase. At the moment, the Dow is down by about 0.5% or 177 points. S&P 500 retreating by 0.25%. NASDAQ also down 0.25% as well. Russell 2000 is down by 0.8%. 10-year Treasury yield up by 14 basis points this morning at 4.54%. And crude oil pulling back by about 0.25%, trading just below $60 a barrel. Wall Street is sifting through first quarter bank earnings this morning. JPMorgan up by 1% after the bank's first quarter revenue surpassed street forecasts, generating $46 billion, higher than expectations of $44 billion. CEO Jamie Dimon did, however, warn that the economy is facing considerable turbulence. Morgan Stanley, BlackRock, and Wells Fargo also reported first quarter earnings this morning. Morgan Stanley saw its quarterly profit jump, driven by a surge in trading revenue. The bank's earnings and revenue also beat estimates. BlackRock beat earnings expectations, while its revenue came in below forecast. And Wells Fargo's first quarter earnings saw a 16% increase compared to a year ago. However, revenue missed expectations. Morgan Stanley down by 2%, Wells Fargo down by 5%, and BlackRock is up by about 0.5%. Meanwhile, Jeep parent company Stellantis said vehicle shipments in North America dropped 20% last quarter. That stock down by 2%. Elsewhere, drug maker Novartis said it promised to spend $23 billion to expand its U.S. footprint. That stock up by 2%. And earnings on tap for next week include Goldman Sachs, Bank of America, Johnson & Johnson, Citigroup, ASML, Taiwan Semiconductor, United Health, Amex, and Netflix. I'm Tucker Silva, and that's Wall Street Watch.
What were we going to cover, Mike?
Bonds, currency, why this matters more than what's happening in the stock market. And you have to have some context for this conversation because the U.S. Treasury market is the most liquid market, it's
the biggest, most
risk-free,
liquid, the most stable market in the world. There's nothing else that's even a close second.
Nothing that compares. And so over the last 25 years, I suppose, more so, but the last 50 years, whenever we Americans would go send money to China for buying a bunch of stuff there, that money would turn around and the Chinese company that received those dollars would be wondering, what do we do with it? And by and large, a lot of it would go into U.S. treasuries. Japanese too, right? You buy that Toyota, you buy that semiconductor, those banks then turn around and say, all right, what do we do with these dollars? And they use them, for instance, to stabilize their own currencies. They can sell them. They can buy their own currency to manipulate things. But generally speaking, when markets turn down, when there is concern, when there is global recession risk or fear, the world turns to the U.S. Treasury market, and that is not happening this time. What does it mean?
Well, there's a few different things to look at here. The first thing that I will say is during periods of significant market dislocation, you can get all kinds of weird pricing that happens. And so you do have to discount a little bit what you're seeing, which I know is kind of like counterintuitive. It's like, no, like if the price is showing that, that's what it is. But you get all kinds of forced selling and forced buying that happens during this stuff. And so you don't necessarily know that what you're seeing is going to stick. So the first thing that I will say is we need to see how this plays out over like a 2 or 3 week period from here. Like if we're still sitting here at the end of April having these conversations, then it means something completely different from, just the last few days. But here's what it does mean is at some level, the marginal demand for U.S. treasuries is not what it was a week ago.
Okay, so who cares?
All of us. And here's why. There are a few different reasons why this matters. The first is, look, if your bonds are selling off but your currency is strong, you don't have a problem. Because ultimately, yes, you are going to be paying more in interest, but you are being rewarded with greater buying power with your currency. Mm-hmm. Okay, that's a pretty good trade-off. Sure, if I have to borrow, it's going to be more expensive, but I can buy more stuff with my money, so fine. Like, that's okay. The issue that you have here is, okay, it's going to be more expensive for me to finance stuff, and my purchasing power is going down. That doesn't feel particularly good. And by the way, this is the exact situation that did in the Liz Truss administration over in the UK several years ago, where they came out with a completely cockamamie budget that just had like...
Cockamamie?
You like that one?
I did.
I was trying to get a little British with it.
I was going to go wonky, but that was definitely that was British. Yeah, I like it.
And again, it was so insane that it literally forced her out of office within 3 weeks. Yep. She made it like 1.5 Scaramucci's, I think. Like it was, it was real tight there. So, in any case, you've got this situation that's developing here where you start to wonder, okay, what are the things that this could be? Because here's the other thing, like none of us know. Like we can all speculate, like, oh, it's China dumping treasuries.
Yeah, there's no evidence that is available today.
It might turn out to be any of these things, but yeah.
Like I know there's been a lot of conjecture, like, oh, the Japanese and Chinese were dumping a bunch of treasuries into the market. We won't know until it could be, but we won't know until they file, which comes months later, how much they had previously and how much they have now in terms of treasuries. So we won't know for a little while.
Right. Here are the things that this could be. It could be any one particular country saying, yep, I want to sell some treasuries to put pressure on the U.S. Okay, possible. Mm-hmm. It could be any one particular country saying, I want to sell some treasuries because I don't really trust the relationship with the U.S. anymore.
Yep.
It could be a hedge fund who is all levered up being long treasuries, getting blown out by their prime broker because they need to make a margin call and they're being forced to sell.
Yeah, I want to explain that one there. Sometimes a big hedge fund or big institution is required to sell a bunch of stuff because they
borrowed too much money and they might not be able to pay it back.
Or they have just, things that they need to pay and they have to choose something to sell. And what's different about that today than 30 years ago is a whole bunch of these institutions' money. Like, let's say you're the Harvard Endowment or you are Mass General Hospital's giant pension fund.
Sure.
You used to own like 10 to 15% of your portfolio in illiquid, unsellable stuff.
Private equity, hedge funds, things like that.
Today, according to the estimates I'm seeing, it's closer to 40% of their portfolios is that stuff. So could that explain a bunch of the volatility in both equity markets and treasuries? Absolutely.
It could. So it could be any combination of all these things. And it's fair to say that, like, again, you're not off base if you, like, have these thoughts about could it be any of these? But we just don't know yet, and we're not going to know for a little bit because there's so much confusion and things are still moving so quickly in
it's fog of war
markets.
We are in a war. It's not a fighting war. It's a trade war. And there's a lot of fog of war right now.
Yes. So if you're trying to untangle what's going on, there's a lot of possibilities, but we don't know anything definitively at the moment here. Let's see.
Let's take a break. When we come back, I do want to get back to we've been having some very high-level conversations. I want to get back to what it actually means for everyday Joe
humans,
with their 401k.
Humans.
Humans,
human
Americans. We can talk about what it might mean for Chinese later, but let's talk about what it actually means for the everyday person because we're getting a little bit high-minded.
Yeah, we are. Sometimes it happens, and for that we apologize. But we'll do better next segment right after this.
Tariff fears continue to grip markets. Get the latest straight from Wall Street right here on the Financial Exchange Radio Network. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan, the experts in elder law, has written a new guide that may help ensure that your assets are protected for years to come, while helping you avoid unnecessary mistakes during your planning. As an example, the new federal estate tax exemption is nearly $14 million. That could lead to a larger inheritance for your family members, but still raises concerns. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red4Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all.
Visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, so as Mike said at the end of the last segment, let's bring this back to kind of day-to-day. What's this all mean? And I think, do we have to start with the assumption that these China tariffs are in place for an extended period of time?
You always start with the status quo.
Okay.
So status quo is tariffs are in place for a while.
Here's where things look like they are right now then. Borrowing costs, going to be moving up. If you're trying to buy a home, a car, things like that in the near future, those borrowing costs are going to be higher than they were a few weeks ago.
Yep.
Because of the tariffs that are in place, not on China, but on things like steel and aluminum imports, on autos, the 10% blanket, prices are going to be moving up in a number of different areas. The estimates that we've seen are that over the course of a year, the average American family, probably somewhere between $2,000 and $4,000 in additional cost. Okay. The reason I say between there, the estimates that are closer to $4,000 include like the effect of China tariff pricing, but don't strip out the fact that a lot of that stuff just might not get shipped.
Right.
And so that's what you could potentially be seeing. I think that if these China tariffs are still in place over the next couple months, if we're still sitting here on Memorial Day and they're fully in place at these rates,
Five Below doesn't exist.
There are a lot of businesses that can't exist anymore. And it's not just ones that sell goods. The other thing that like I've been thinking about, if you are a business that relies on processing credit card transactions, how many of like the credit card things are made in China just because it's the cheapest place to make them? Like if you're trying to open a new business or get replacement parts for that stuff, it might not just affect goods retailers, it might affect services retailers and how they actually operate. If you are if you're a restaurant that, again, think about appliances that get sourced from China and stuff like that.
Sure.
If you're trying to start up a new restaurant, are you going to have the inventory to be able to do so of the stuff you need to open?
What a just dumb 20 to 30 year policy we've had of allowing such important goods to be concentrated in specific countries.
Well, yes.
Forget about China for a moment. We're going to talk about Taiwan later on in the show, too. Like, hell yeah, it's way too messy to allow Americans to deal with these rare earth materials. There's going to be a bunch of people have cancer, so let's do it in some Asian country instead. Like, that won't create any problems. But anyway, what do you do if you are approaching retirement here? Forget about the unknowns on prices. Like, what do I do about my portfolio? Because there's been a lot of negative thinking, a lot of negative responses to surveys. I feel like there's also been a lot of just fatalistic thinking, and that's not terribly useful when you're thinking about your investment portfolio.
No, I mean, here's the thing. Everything always looks really bad when you're at the scariest point. And this is not to say that this is the scariest point. It might get scarier in markets. I acknowledge that.
Sure.
But things are never as good as they look at the peak, and they're never as bad as they look when you're, at the bottom. So I think just having kind of, again, a little bit of the calm that I think you can find is through, hey, I built a portfolio understanding that there might be, 20 to 30% ups and downs that happen from time to time in markets. That is normal. And my income, in order to supply my daily and monthly needs, is going to still be able to come from places X, Y, and Z.
Mm-hmm.
Or, hey, if you're younger and listening to us, if you're 25, look, when you were born, I don't think anyone conceptualized that on this day in 2025 we were going to be in this exact situation. Likewise, if you're nervous because you've just started working and you're trying to figure out, hey, what are things going to look like 40, 50 years from now? Honestly, don't worry about that.
Right.
Because you'll have no idea. They're going to be way wilder and way more way differenter
Yes, that's correct.
Yeah, that's the correct pronunciation.
Differentest. It's going to be the differentest world you've ever seen.
Furthermore, the other not useful thinking that I get all the time is the pure like Mad Max scenario, which I get that that's kind of like fun and sci-fi to talk about, and maybe not fun, maybe terrifying to talk about. Like, what happens if war breaks out? What happens if institutions, banking, all the financial institutions fail? I think the reminder there is
first, the United States will not turn into a desert.
And second, if that's what you're worried about, then there's really nothing to do to your portfolio to prepare for that.
No, your broker won't be able to answer your call in that situation.
So, like, again, I do sometimes answer those questions. Like, well, what if the dollar is no longer the reserve currency, or we stop paying on treasuries? I'm like, well, honestly, don't worry about it, because your banks probably don't exist at that stage. So those aren't useful exercises to go through. I think what are useful exercises to go through are to ask yourself several questions, like, hey, could I handle a disruption to my income of 6 months? Could I handle a big emergency repair on my home? Have I thought through my investment portfolio strategy if we go through a 20% market decline from where we already are, which is down 14%?
Yep.
Those are useful exercises to go through, right?
Yes.
Like, that is an important piece of this process. Where is my diversification coming from? Maybe you've undergone that. Maybe you could use that second opinion, or maybe you have no idea what I'm talking about. In any of those cases, it might make sense to give somebody a call and get a little bit more information and just a second opinion. And if you'd like one, you can call us at the Armstrong Advisory Group. The number's 800-393-4001. Let us take a look at your big picture financial situation, whether that's your investment portfolio with your 401ks and other stuff. Maybe it is your pure financial situation. You're in your 40s, you're still working and saving, but worried about some of those potential pitfalls that I mentioned. The number again for the Armstrong Advisory Group to talk to a real live human being is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
If you're getting excited for 420, so is JM Smucker. They're sending a Munchie Mobile on a road trip to celebrate April 20th, promoting Twinkies, Ding Dongs, and Donuts.
Gotta let my father know.
They're just leaning. They're leaning into the stoners a week and a half from now. I mean, like what a headline! Again, this is from the Wall Street Journal. Twinkies' new owner courts a novel group of snackers, stoners. Like, just hey, we're gonna send a bunch of. What do you call these? Like, it's just snack. It's not snacks. Like, this is meatier than a snack.
Junk food.
A bunch of junk food.
Yeah, junk food.
We're going to go find a bunch of high people and send them some junk food.
Yeah. I mean, this is right in line with the Girl Scouts who set up right outside the cannabis shops.
Do they do that now?
I've seen that, yeah. Top notch.
It's a
top notch
good
work.
spot.
But it literally says Munchie Mobile on the truck.
Oh, yeah. It's got,
right there.
It looks like it's right out of Scooby-Doo. It's got like the little hazy like things and everything.
I know that we frequently cover stories that are not mainstream, but the Wall Street Journal publishing this, like, how close are we to federally legalizing cannabis based on this? Like, this has got to be within the next 10 years.
I just got
maybe 5.
The Munchie Mobile truck over the next few weeks will hand out free snacks outside cannabis dispensaries in New York, Massachusetts, Connecticut, Maryland, and New Jersey every day at 4:20 p.m., eventually parking for 6 hours in Brooklyn, New York, of course, on 420 itself.
Why wouldn't you just sell them? Why are you handing them away for free? Doesn't make sense. Make some money.
It's a loss leader, Tucker.
Yeah.
You know?
The Gen Zs don't know what a Twinkie is. They need to get back on the Twinkie Mobile.
Yeah.
So, yeah, I thought this story was just great because it's, I don't know, again, I always have said that there should be a Taco Bell co-located with every dispensary out there.
Yeah. Well, Hostess is on it.
Let's take a quick break here. We got hour 2 coming up in just a little bit. Still a lot more to get through on the Financial Exchange.
We're Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditors. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return, number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Good morning. Happy Friday. Welcome back to the Financial Exchange. Sorry, Tucker. I know I came in a little hot there, trying to keep my levels in check. Markets are back in negative territory. They've been flip-flopping all morning.
Honestly, it's fine. Like,
out.
down 0.5%.
Yeah,
fine.
I'll sleep.
I'll sleep
fine
close
tonight.
the market. Like, call it a day. We're done.
So you've got major indices off by about 0.5%. Anybody that's been following markets this week will take that with a grain of salt because markets have been moving. I mean, did we have a 10% swing in either direction this week?
Mike.
Probably.
Mike.
Maybe more like 15.
The first 3 days of this week, each day had a 7% intraday range.
Yeah.
At minimum.
Yeah. So this is nice.
Mike, yesterday, we had a 5.5% range.
Right.
4.5%, sorry.
So this morning, you are not getting much volatility in the stock market. You continue to see quite a bit of volatility, however, in the bond market with treasuries selling off substantially. The yield on the 10-year treasury is now up to 4.582.
20 years just crossed 5.
Which is 0.5% higher than it was at the close yesterday. So a big move up in yields this morning on sales of treasuries that are coming from who knows precisely where. Could be inflation expectations from the Michigan Sentiment Survey, but also could be foreign sellers of U.S. government bonds in retaliation to trade policy that we're seeing out of the White House.
And by the way, that is now up 0.72% since the low of last Friday. We got down to 3.86 last Friday, 4.58. Let me see if Mortgage News Daily has done their midday update yet. They have not. I would expect their midday estimate for their rate survey. 30-year fixed rate mortgage was 6.97 yesterday. You're going to be 7.1 to 7.2 today.
Yeah, and again, why? Just to explain all this out, what did you say the yield on the 30-year bond was?
The 30-year is 4.98 now.
Okay, so if you are a bank that you're sitting on your customers' deposits right now, you have a couple of options. One, you could go buy that 30-year treasury at 4.98%, or you could go issue a mortgage to Chuck, Tucker, or myself, and we might be great credits. We might have fantastic credit worthiness, but I'm not going to be charging any of us 5.5% to 6% here in order to write that mortgage because it's a heck of a lot more risk.
Right. The big thing is the U.S. government can print its own money in order to pay that mortgage.
Chuck, Mike, and Tucker cannot.
No, I can print my own money. It's just not legal tender for me to do anything with.
Yeah. Yeah.
You know,
Stanley Nichols.
How many Schrute bucks can you put on the head of a pin?
Right.
Is the question that I always like to ask. Let's talk a little bit about what we're seeing from earnings season, because with all of the tariff kerfluffle, we do have earnings that kicked off this morning. Big banks: JPMorgan, Morgan Stanley, Wells Fargo, Bank New York Mellon. All of them reporting. You also had BlackRock. Is BlackRock the world's largest asset manager now?
I do believe so.
It's got to be either them or Vanguard, right?
Yeah, I believe it's BlackRock.
Anyways, they reported too, but
Number one.
They're number one?
Correct.
Oh, that's fun. Do they wear one of those big foam fingers? Does Larry Fink have one of those that just says, like...
Not seeing any foam fingers here.
No foam fingers for Larry Fink. So it's not Larry Foam Fingers.
Don't believe it is.
Okay. JPMorgan reported earnings this morning and had a perfectly fine quarter.
In fact, pretty solid with especially trading revenue.
Yeah, good quarter. I mean, you would expect trading revenue to be good. And, even Q1, we were seeing some stuff in March. Yeah. $14.64 billion profit, and revenue rose 8% to $45.31 billion. Jamie Dimon pretty much said, things were cranking along pretty well. He did have some comments, though, about the broader economy that I think are notable here. And I'm going to quote from him just because it's worth it. What I would say is he was asked about state of the economy. He said, what I would say is our excellent economist, Michael Ferroli, I called him this morning specifically to ask him how they're looking at their forecast today. They think it's about 50-50 for a recession, so I'll just refer to that. And obviously, if there's a recession, credit losses will go up and other factors will change too. So pretty much saying, yeah, things could get worse for us if there's a recession. I think you're going to see a lot of companies, you guys, not you, but the analyst community has already reduced its earnings estimates for the S&P by 5%. So now it's up 5 as opposed to up 10. My guess is that will be 0 and -5 probably by the next month. And then you're going to hear 1,000 companies report. They're going to tell you what their guidance is. My guess is a lot will remove it. Jamie, thanks. You listened to our show. We said this a few days ago that companies are going to start pulling guidance probably. I appreciate that. And A couple other quotes that I think are interesting in here. Anecdotally, a lot of people are not doing things because of this. They're going to wait and see. That's M&A with middle market companies, people's hiring plans with stuff like that. So people have to adjust to the new environment. So Diamond saying, yeah, things were good in Q1. He actually said that, look, they're starting to see a little bit of an uptick in consumer spending on credit cards as people try to get ahead of any potential tariffs. But that for the stuff that really drives the economy, he's expecting there to be a slowdown is what he's guiding.
They also set aside $973 million for future loan losses.
Not a huge chunk of change.
No, I don't recall how much they were setting aside in the early days of COVID. I don't think it's quite up to nearly those levels. But they did set aside some money for future loan losses. But I think... Look, we're heading into earnings season, which would normally be all that we are talking about right now. Obviously, there's been a few other things on the docket this last week or so, and there will continue to be. I think what you have to expect here when it comes to earnings is massive potential swings and massive volatility related to those earnings because there's going to be some weird statements. This Monday, for example, probably the worst possible time to report your earnings. Levi's reported results, and
like 4 days ago, you're saying?
Yes, they reported their results, and again, nothing to do with banking. They had a fairly good quarter. They've got supply chain stretching from China to Mexico, though, and they delivered a solid earnings report. But as analysts and investors, this is a quote from, I think, Bloomberg here. Yes, Bloomberg. As analysts and investors digested the company's forecast, which ignored the potential impact of a recent tariff, its shares plunged 8% Tuesday. Then they soared Wednesday, driven higher by the broader rebound, and dropped again Thursday, leaving them down 16% for the year. Investors are not going to really know what to do with these earnings forecasts, and I think a lot of the forecasts aren't going to be there in general. I think a lot of companies are probably just going to come out and say it. We don't know how much we're going to make this year.
Yeah.
And that's going to leave a lot of people kind of in the wind in terms of how you value those companies.
Right, it's a question of, okay, you take your previous guidance, now you got to kind of add like a big cone around it as far as, the directions that it could go. Because, look, for some companies, they may find dislocations that help them with profits in isolated areas.
Sure.
I'm not saying that that's going to be like the case everywhere, but hey, if you're a company that has been sourcing all of your product from the United States and Brazil, okay, you might be in like a fine situation where you're not overly disrupted, and maybe you capitalize because you pick up more market share, and so your earnings go up. Like, there are going to be companies that do benefit out of this. There are going to be other ones, like Five Below, where we covered, where they import the vast majority of their product from China. I have no idea what you even do with that because I don't know what their inventory is going to be. I don't know what their sales are going to. I don't know any of that. So you're going to see some funky things, and again, there are going to be some companies that end up doing just fine out of this. Like it's going to be a very strange couple of quarters as we try to navigate what it looks like, but it's not going to be everyone has these huge downward shifts in revenue and this and that. Like, there are going to be some winners out of this too. Like, it's not all one direction there. Let's take a quick break here. When we come back, let's do a little bit of trivia right after this.
Tariff fever is in high gear. We've got the latest on what might be next and how long it might last. Only here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan, the experts in elder law, has written a new guide that may help ensure that your assets are protected for years to come, while helping you avoid unnecessary mistakes during your planning. As an example, the new federal estate tax exemption is nearly $14 million. That could lead to a larger inheritance for your family members, but still raises concerns. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And on this day, back in 1961, Bob Dylan made his first appearance at Folk City, Greenwich Village, New York City. Folk City was one of the most influential music venues in the country until it closed in the late 80s. Trivia question today: who played Bob Dylan in the 2024 biopic A Complete Unknown? Once again, who played Bob Dylan in the 2024 biopic A Complete Unknown? Be the fifth person today to text us at 617-362-1385 with the correct answer, and you get a brand new Financial Exchange Show t-shirt. Once again, the fifth correct response to text us at 617-362-1385. We'll get that t-shirt. See complete contest rules at financialexchangeshow.com.
By the way, we've been doing this all week, but you can also text that number if you have questions for Tucker. Or
just
Chuck,
about stuff.
Chuck or myself.
If you got questions about what's going on, text the show at 617-362-1385.
And if you want to know how Tucker makes such delicious beef jerky at home, then you can also text the show, and he'll be sure to share the recipe.
It is outstanding.
Oh, thanks.
Good job,
First
Tucker.
time doing it.
It's outstanding, I got to say. Like, just fantastic. It's only going to get better from here. First time, right?
Yeah. I don't know if how it'll get better. It's just, it's the same recipe.
So you're saying that your first time is your best time?
No. I've botched plenty of barbecue stuff.
Peaked in his 30s.
Sounds about right.
Don't we all? Anyways, let's talk about this piece from Bloomberg, the beauty salon recession indicator.
I I like weird recession indicators, and I think there's probably
like the
plenty of
underpants
people.
one.
The underpants one is a great one, and this is an interesting one. So if you've ever been to the Javits Center in New York City.
I haven't.
It's a giant convention center. It's where they host, for instance, if you run the New York City Marathon, you go pick up your bib there. But yeah, plenty of giant conventions. And this week, they happen to be having the event of all events for the beauty industry. There are more than 32,000 spa technicians, hairstylists, colorists, and makeup artists descending on New York from across the country.
It's for the International Aesthetics, Cosmetics, and Spa Conference.
And generally speaking, I don't think this is something that Bloomberg usually covers.
No, usually it's
could be wrong.
It's like CES from Vegas the first week of the year.
Yeah. But they did this time send a bunch of reporters down. And why they did so is because they were interested to hear, like, okay, if you're getting your, what's a cosmetic? If you're getting your Botox injection, if you're getting your blowout, if you're getting, I don't know what other, your manicure. Yeah, I'm nailing it with these beauty treatments.
Keep going.
Nice pun. Nailing it.
Yeah, thank you. Then those are by default, for most people, a pretty discretionary item. It's not something you necessarily need on your regular schedule. And so they were curious. Are they seeing any pullbacks? They went and talked to dozens of different people across the country there. And generally speaking, across the board, the people that do this for work were saying, yeah, our regular customers are stretching things a little bit. They're skipping their regular appointment. They are not seeing the same volume of customers that they were even just a few months ago. I think it speaks to and lines up with everything else we've been hearing. But I guess I like to cover it because I'm hoping that there's somebody else listening that can kind of text us in if they're seeing this type of thing or something different in their own line of work. Maybe you operate a barbershop. Maybe you operate a home construction business. Are you seeing any of this stuff that we're talking about playing out in your personal world? 617-362-1385, again, is that text number. But I find these types of stories to be really fascinating because, yeah, industries like this oftentimes get a very early sense of what's happening in the consumer spending world.
This is another place just... Again, like probably
everything that you get supplies from is from China in this industry.
Right? Like, how do you even know what your inventory is going to look like? How do you price it? I mean, it's just you wouldn't think you'd have to be, a supply chain engineer to work in that business, but like now you kind of have to figure out how you're going to do it because I'm the least qualified person to talk about this. I have no hair and I keep my beard nice and beefy, so like I'm not one for, a whole bunch of personal care appointments and products and things like that. But I can tell you, like, from what I do know, the people that, do spend money in these areas, they typically are looking for, like, the same products on a repeated basis. Like, they don't want to be switching and changing all the time. So I don't know how this is going to work from just a sourcing perspective when you talk about, barbers and stylists and estheticians. Like I don't know what it looks like.
Yeah, it's an interesting read if you get a chance to check it out. It's they really do get people from a number of different backgrounds and areas, and pretty universally the answer is people are stretching the dollar. They're not tipping as much, and they are generally pulling back on frequency of these types of appointments.
So again, just I think. Like the underwear index, which we found out that Warren Buffett, they own Fruit of the Loom, right?
They do own Fruit of the Loom, so we probably don't get much. The underwear index is another famous one out there. If you missed that show that we did, famously Warren Buffett liked to look at it, but you just take a look at sales of underwear companies because
no, it was Alan Greenspan.
It was Greenspan?
Greenspan.
Sorry, my apologies. He liked to look at that because it was a pretty good indication of, hey, if men in particular are worried about the economic situation, it's one of the first things they'll cut out of their budget. They'll just wear boxers with holes in them until their income situation improves.
There's a few. So I just pulled up the Wikipedia page for the men's underwear index, and they have the C also. Like, okay, what else is out there? There's also the hemline index.
What's that?
It's a theory that suggests that skirt lengths rise or fall along with stock prices.
Oh, I've heard.
It's
of
more
this.
correlation than anything
Yeah.
else, but it's kind of like how, the interest rate chart that shows the Fed share heights. But the most common version is that skirt lengths get shorter in good economic times and longer in bad ones.
Interesting.
The reverse has also been proposed, with longer skirts signaling prosperity like the 1950s. It's most commonly attributed to economist George Taylor in 1926.
I'm not sure I'm buying that one.
So there's that.
But I've never worn a skirt.
There's also, let's see, the lipstick index. Similar. Increased sales of cosmetics,
Yep.
Oh, no, this is interesting, actually.
Oh, yeah.
It's a reverse indicator.
Yes. Lipstick is a cheaper item that people can buy and still feel good about it.
Yes.
And not blow the budget out.
So it's kind of a contra-indicator. As lipstick sales go up, you start to see a bad economy developing.
Yep.
Interesting.
Yeah.
I hadn't
heard
seen
that one before. Sorry, I forgot about it. These are just so unique and compelling and interesting that they're so different from what we usually talk about that they're pretty intriguing. If you have your own cool recession indicator, we want to hear about it on the show.
Is there anything like when things slow down like that you're like, okay, I buy less of that or I buy more of that?
It's the more common things. I dine out less frequently.
Sure.
I do change where I do my grocery shopping when the economy is bad, right? If I was oftentimes going to Whole Foods, I'm going to attempt to go to Market Basket on my way home instead, even though it's, way further out of the way. So those types of behavioral changes, I can't think of anything I buy more of when the economy's garbage.
Alcohol?
Cigarettes?
Never smoked cigarettes, maybe alcohol.
I forget which day it was in the last week, but there was one day where there were like 5 or 6 stocks that were up for the day, and 2 of them were Philip Morris and Netflix. It was like, okay, so we're going to get through this by smoking and watching Netflix.
Yeah.
Like that's what the market was telling us.
Binging 2 different types of products.
I'm taking a look at markets right now. Relatively calm day. Not much going on, actually. The Dow is off 217 points. The S&P's down 20. The NASDAQ down 52. So maybe you're starting to get a sense of volatility coming in a little bit, but that's just in the equity markets. Bonds, 10-year Treasury off 0.15% up to 4.55. Oil up 20 cents a barrel to $60.27 right now. Quick break. We got the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
It happens all over Massachusetts.
Can you tie my shoes?
In every home, and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Build a Retirement Budget. Mike, one of the issues that we've seen for retirees in the last several years is significantly higher home insurance premiums and property taxes going up as well. How do people attempt to navigate this but still stay within the budget they had laid out for themselves?
Yeah, look, the cost of home ownership, I don't think this is a surprise to anyone. Whether you are buying a home for the first time or you are just seeing those insurance and tax rates that you mentioned going up, it is really impossible to avoid. And I think that's where that flexibility in the budget comes in and needs to be recognized. Because, for instance, you might have factored in a huge cost savings by moving to Florida a decade ago.
Sure.
A lot of that has been eaten up over the course of the last several years. And so you have to have a budget that can evolve with your lifestyle over time.
How often do you review that budget?
You know, I think it's important to at least get a grasp on it once a year. And you can really see costs fluctuate a lot during those periods of time. But those flexibility points are really important because you have to account for inflation and different things inflate at different rates. So, for example, you might see that your costs of health care rise dramatically in your later years, both because you need more of it and because health care costs inflate faster than other types of costs. And you have to build those into the budget, even though you might be paying nothing for them today.
This month, our guide is titled How to Build a Retirement Budget, and the way to request it is by calling 800-393-4001. The guide again is How to Build a Retirement Budget, and the number to call is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia question today. Who played Bob Dylan in the 2024 biopic, A Complete Unknown? That'll be Timothy Chalamet. Winner today of the Financial Exchange Show t-shirt was Maureen from Dayville, Connecticut. Congrats to Maureen. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
He's been in quite a bit recently, hasn't he?
Yeah, he's a star. Yep.
Yeah. He's I got to say, so do you guys know the first movie that he was in?
Yes, I think. Interstellar, right?
Correct.
Yeah. I realized that in my 8th viewing of that movie. I was like, oh, that's Timothy Chalamet.
Was he the kid?
Yeah, he was the son, yeah.
Like the youngest version of the son.
Got it.
I got to say, I watched the second part of Dune Part 2, if you will.
I haven't seen it yet.
And first of all, much more engaging than the first, which I thought was like visually great, but just kind of a little slow. The second one's fantastic.
Okay, we'll check it out.
It cooks. I got to tell you.
Are we just getting into reviews of 2-year-old movies now?
I just watched
Tombstone. It's 1-year-old, actually. It came out last year, so thank you for playing. You watched what?
Tombstone.
Oh, tell me what happens.
It's only 30 years old. Watched it because of Val Kilmer, obviously.
Have you guys seen Top Gun?
Which one?
Exactly. Let's talk a little bit about the spring housing market. So, piece in the Wall Street Journal, stubbornly high mortgage rates thwart critical home selling season. So, yeah, this is going to be the story along with, look, all these costs are up. Mortgage rates, property taxes, insurance. It's going to be a tough spring housing season given where the cost structure is. Mike Simonson, who we chat with occasionally, is from Housing Wire. His data at the beginning of this week. Here's where we stand. And again, this is all backwards looking, but it's informative about, what may come. So for pretty much the first 3 months of the year, you were running pending home sales a little bit below 2024 levels. But new listings were growing more rapidly. So we get to the point now where existing inventory, and this is as of the beginning of this week, was at 691,000 units nationwide for single-family homes.
Okay.
That is up almost 35% year over year, and now is only about 15% below 2017 through 2019 levels.
Yeah, I was going to say, I'm not looking at single-family listings, but according to the St. Louis Fed, of all active listings, they're exactly 80% of March 2019 listings.
Yeah.
So, we're getting there.
What you are seeing, though, because of more listings and people not being able to afford them, price cuts are at a decade high for this time of year. Right now, 35% of single-family listings, according to Mike Simonson, have a price cut on them. The norm for this time of year is around 25 to 27%.
So let's talk about where that's a thing and where it's probably not. So in Arizona, I'm looking at this data. Housing inventory in Arizona is 105% of March 2019 levels. Florida is 116%, and Texas is 121% of March 2019 levels. You got a lot of homes for sale there. I think there are probably some housing cuts coming. In Massachusetts, half. In Connecticut, I continue to laugh because I just don't understand what's happened in Connecticut.
What is going on there?
I think what it was is so many New Yorkers moved out and moved to Connecticut, but I could be wrong. I don't know.
Sure.
There are 23% of the homes that were set for sale in 2019 are that's the volume of homes that are for sale right now in Connecticut.
So it's a quarter of normal inventory.
It's a quarter of normal inventory.
Probably not many price cuts coming there.
There are other places too. Like I hadn't looked at Illinois, but I was curious. Midwest, biggest probably population state in the Midwest. A third of the homes that were for sale in a normal market are for sale right now in Illinois.
And so this gets at, okay, if you are considering a move right now, which, again, I know with all of the uncertainty about, tariffs and this and that, you may be saying, okay, let me put that on the back burner.
Leave Connecticut and go to Texas?
Well, here's what Mike Simonson is saying. So there are actually 8 states right now that have statewide home price declines in place compared to last year. Texas, Florida, Georgia, South Carolina, Arizona, Iowa, South Dakota, and Washington State. He says the next 2 that are probably up are Colorado and Tennessee.
Okay.
So it is something where, in theory, and again, this is theory, okay, if you can find a buyer for a place in the Northeast that you are trying to sell, and you are looking to move south and or west, southwest, if you will, you have the possibility to find some deals because you have some bargaining power in both cases. It's a seller's market still in the Northeast in many areas. Not everywhere. I mean, obviously, the more rural you get, like those have been challenging places for a while now. But if you are trying to buy into, markets in Florida and Texas, you can have some opportunities that pop up. The piece to be aware of, though, is the insurance and property tax side of things. I have a buddy of mine who I was talking to just about like housing costs and everything. He lives in Texas. He's like, I've gotten hit by a $2,500 property tax increase each of the last 2 years. My property taxes just tripled, basically, is what he told me. I'm like, that doesn't sound fun. I know people in Florida that have had their insurance costs quadruple in the last 4 or 5 years. It's messy everywhere. So remember, if you are in the market for a new home, those secondary costs of insurance and taxes are likely a bigger proportion of your budget than they used to be, and you need to factor that in. It can't just be the home price. Those other pieces are getting to be a bigger chunk.
Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visit usvi.com/promotions, where you'll find details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visit usvi.com/promotions for more information and to book your trip today. That's visit usvi.com/promotions.
Speaking of that cost comparison there, Chuck, I do hear from a lot of retirees. This has been the narrative for over a decade of, I'm going to leave that high tax, high cost of living state in New England and go down to Florida. And for some people, don't get me wrong, this makes a ton of financial sense. But when we think about retirees specifically living in, say, fair to say Massachusetts is the highest tax state in New England. Maybe Vermont. No, probably New England in terms of total tax burden, especially if you consider the estate tax.
I found the state and local tax burden by state from the Tax Foundation. For New England, well, I'll just give you the national rankings because I can't think through what the math is. Massachusetts is the 37th. Massachusetts is ranked number 37, which I guess means it has the 14th highest tax burden out of any state in the country. Rhode Island is 36, so a little better. Connecticut, 49. Second worst in the country is Connecticut from a tax burden perspective. New York's the only one that's worse. Let's see, who else is here? Maine comes in at 41, so Maine's a little worse than Massachusetts. New Hampshire comes in at 16, so New Hampshire's the only New England state like in the top, third, and Vermont's at 47. So basically, aside from New Hampshire, everyone else is kind of clustered in like the bottom 20th percentile.
But my point would be, let's focus on Massachusetts for a moment here. And you're collecting Social Security. You're collecting imagine for a minute you're collecting a police pension or something like that.
Sure.
Massachusetts doesn't tax those incomes.
Yep.
And so, certainly while working, that Massachusetts FMLA and the income tax coming out of your paycheck is big. It's a big dollar amount, not to mention if you're making like $5 million a year in Massachusetts and you're paying the extra income tax, the millionaire's tax. But when you get into retirement, it's very much a different story. And you do start to think through like, okay, if I am moving down to Florida, just how much more is my insurance going to be? Right. What if I want flood insurance or hurricane insurance? How much is that going to cost me? My car insurance goes up. My grocery costs, from what I understand, in Florida are substantially higher.
Groceries are higher there?
That's what I have heard than in Massachusetts. So it's this balancing act that is not as imbalanced as it was 15 years ago, which might actually be encouraging for New England states who have been losing young populations for over a decade now. Not Massachusetts as much as some others, but that is a little bit encouraging for New England when you start to look at the balance here on cost of living in some of these other states.
Let's take a quick break here. When we come back, we're going to be joined by Paul LaMonica from Barron's, and we're going to be talking Kenvue right after this.
The global trade war is in full swing. How long will it last is anyone's guess. Keep it here for the most up-to-date information plus breaking news every day, right here on the Financial Exchange Radio Network. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan, the experts in elder law, has written a new guide that may help ensure that your assets are protected for years to come, while helping you avoid unnecessary mistakes during your planning. As an example, the new federal estate tax exemption is nearly $14 million. That could lead to a larger inheritance for your family members, but still raises concerns. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bend you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and you can register right now for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
As promised, we're joined now by the one and only Paul LaMonica from Barron's. Paul, how you doing?
I'm good. It's been a week, hasn't it?
It sure has. We're going to talk a little bit about Kenvue today. For listeners who are like, what the heck is Kenvue? What the heck is Kenvue?
Yes, it's a great question. Kenvue is the consumer healthcare products spinoff of Johnson & Johnson. So you may not recognize the name Kenvue, but you probably know most of their major products. That's Tylenol, Benadryl, the Neutrogena and Aveeno skincare brands, Zyrtec, Listerine. So a lot of brand name products you'll find in your local drugstore. And, the stock has been a bit of a laggard since the spinoff, but there are a couple of analysts who see some, potential catalysts that could get the stock moving again.
What do those catalysts look like?
Yep. Yeah, so analysts said Wolf Research, they noted in a report this week that the valuation for the company, it's very cheap compared to some of their consumer healthcare rivals. It's trading only around 18 times next year's earnings estimates. The Wolf analyst said that, if you get that back to, a multiple of where its peers trade of around 21, stock could be up about 20% from current levels. But even that might be a conservative estimate because there have been problems, slower growth in the skincare beauty side of their businesses. And if they're able to turn that around, then that could get the stock going even higher. And if they're not able to turn it around, then there might be more pressure to sell it because you now have an activist investor, Jeff Smith of Starboard Value, who was threatening a proxy fight with the company, but he was able to form a truce with them. He's now on the board. So he's not going to be fighting from the outside, if you will. He's a board member that can exert a little bit more pressure for the company to make some changes.
So generally when you start talking about, multiple activist investors getting involved, things can get, kind of messy in terms of the governance situation. How does an individual actually handle that if they're considering investing in the company?
Yeah, that's a great question. I think that the key here is that Kenvue analysts are happy that Kenvue very quickly addressed this situation and didn't let it fester and linger and become a long-term distraction. So the fact that there's an agreement and Jeffrey Smith at Starboard is now on the company's board, that's something that, as one analyst wrote, she thinks that the nimbleness and quickness of how quickly Kenvue moved, they realize that there is some urgency here. And I think that's something that investors appreciate. And it's one of the reasons why she has a buy on the stock and a target price of 27, which is also, again, about 20% higher than current levels. That's the analyst at Piper Sandler who wrote that.
On the other hand, just because something's cheap doesn't mean it has to get more expensive. What's the downside case if things go badly here?
Yeah, obviously you have to be wary anytime a stock is quote unquote cheap that it could be a value trap. And I think there are worries that potentially the company doesn't turn around the skincare business and is reluctant to try and maybe sell it to another company that might find more value in it. That would be something that would likely drag down the stock. And, I think it's also worth noting that even though a lot of the analysts I spoke to for my story are bullish on the stock, by and large, this is a company that, analysts still, far more many analysts that follow it have a hold rating on it than a buy. So I think there are definitely worries that this could be, dead money for the foreseeable future. But, there are some pretty savvy analysts on Wall Street that take a different viewpoint. And again, Jeff Smith, very, very well known as an activist investor at Starboard, having him on the inside now, I think is beneficial because he could force some changes without maybe it being as much of a distraction because he's not launching a proxy fight.
Very good. Paul, appreciate you joining us today. Thank you so much for the time, and I hope you have a great weekend.
Same to you guys. Have a good one.
That is Paul LaMonica from Barron's talking about Kenvue. It's been a week, Mike.
It has been a week.
It's been a week.
It's been a busy week for anyone in financial media or in markets. So I want to talk about something that we kind of missed this week, which was all the natural disaster and flooding in the Midwest, Arkansas, Kentucky, facing big floods, and what it might mean for you up here as well. The Buffalo Trace Distillery has had to temporarily close.
What?
And it was announced that there could have been damage. They're closed through yesterday, so I don't have an update on this. But there may have been damage to some of their whiskeys. And remember that Buffalo Trace, in fact, does operate and make the Pappy Van Winkle brand bottling of that bourbon. So if you're holding on to any rare Buffalo Trace bourbons, you might be looking at some price increases on those. I don't personally collect alcohol. I do consume alcohol, but I've never really understood the idea of
not
putting
so good
it on
at
your
the
shelf.
collecting part.
Yeah, it doesn't last that long.
To the consuming
and I also
part.
don't have tens of thousands of dollars to blow on a bottle of Pappy, so that's also not happening for me. But
Sure.
good old Buffalo Trace facing some issues due to flooding across the South and Midwest.
Taking a look at markets, things remain very boring right now, which is just fine with all of us. The Dow's up 31 points, the S&P's up 9, the NASDAQ up 57. So a modest upward move right now. Like 10 minutes from now, it could be completely different, but at least at this point, pretty quiet. Hope everyone has a great weekend. Again, I know it's been a long week. Take some deep breaths. We'll see what happens Monday. We'll get there. But, again, have a great weekend. We'll see you back here on Monday. We got earnings season really kicking off next week as well.